Hey, welcome to the 40 Finance channel. Today I've got 5 reasons why the stock market bull run will continue throughout 2025. I think sentiment's getting bearish in a lot of the sources that I listen to and read. So I thought it was important to take maybe it's a contrarian point of view that some of the indicators out there say, there's still a lot of wind behind this bull market sale. Quick promo before we begin. If you're interested in learning more about my favorite stock research platform, if you love reading about stocks, researching stocks, tracking your portfolio, all the things, Seeking Alpha Premium, take a minute to click on the pinned link in the description. Get yourself a 7-day free trial to this platform as well as a discount on your first year. Okay, now reason number 1 why I think this bull market can continue is the way the CPI has been trending here over the past 3 months. And I think that Tom Lee does a really good job of summarizing that. We'll look at some other data too. And of course, Tom Lee is the bull of bulls when it comes to stock market analysts. And you see that he calls out, the benign CPI reading that we recently had. And if we dig into that a little bit more, this Liz Ann Saunders did a good job of breaking it out by category, or at least highlighting it. The things that were on the high end, motor vehicle insurance, airline fare, tobacco, motor vehicle maintenance, and natural gas, those were the leaders in CPI. Now, this is year over year change. And you see you actually have some laggards, which are, we'll talk about the month to month here in a second, but they're going to catch up a little bit. Fuel, gas, used cars, new vehicles. But when you think about this being a year over year change, when you see a lot of the things that, get highlighted in the news, rent, 4.3% over the past 12 months has been the change. Meat, eggs, you're looking at 4% there, again, over the past 12 months. And a lot of these other categories are well into single digits. If you take a look at it from a month-to-month change, and here's where you have gas and fuel ticking up a little bit. It was a bad month for them, but some of these other things barely moved. So even new vehicles, 0.5%, rent, 0.3%, food away from home, 0.3%. And while those numbers are up, and I get it, like every 0.3 equals, something more as the year trends on. The bottom line is that very few of these category prices are going to turn negative anytime soon. We were more concerned about the pace of CPI and how much it was growing. Something like we're seeing here on this month over month chart puts you right back to the kind of that target 2%. It's not going to land there tomorrow, but the slowing pace, I think, is a good sign. Now, the second reason to be bullish through 2025, and I kind of called this out in the beginning, and that is the fact that bearish sentiment is up significantly. And this is a great chart. This is from the Daily Number with Grant Hawkridge, and he calls out the 1 week change. Let me see if I can highlight it. The 1 week change in investor intelligence bears has spiked to 12.5%. And you can see the chart here, and actually green means that it's more bearish. So more bears enter the market when you have these green spikes as opposed to these red ones. And of course, this goes back to 2018. You had a huge spike in bearish sentiment, and that led to a nice little run. Same thing happened, of course, in 2020 with COVID, and you had all these other spikes. And then here recently, in 2025, we had another big spike, which honestly, just eyeballing it, kind of rivals the COVID one. And those spikes in bearish sentiment, at least on this graph, compared to the S&P 500, usually led to some good things right around the corner. And to add some context to this from Grant, this also marks the highest 1 week rate of change that we've seen since March 2020. Bearish spikes of this size typically occur around market lows, especially during drawdowns exceeding 20%. This particular spike in bears has occurred while the S&P 500 is only 1.5% away from its all-time highs. So does the S&P follow the usual pattern and rip higher from here? or is this time different? So this will be the first time that we've seen this bearish indicator spike so high at a time that we were close to all-time highs. We'll have to see how it plays out. Okay, the third consideration that I'll call out in terms of being supportive of a bullish environment is the VIX is so quiet right now, it's almost eerie. All right, so at 1466 while I'm recording this, and you start to take a look at this chart, and this is the QQQ that's running above, just for example, you had a so-called volatility near the end of 2024 that got into the 22s. I'm not sure exactly what the high was, but you've got to get into the 30s, okay, to have a, let's just call it, measurable impact on the market. You've got to be in the 30s if you're going to talk about periods of volatility. And you see that we last had that in 2022. And of course, the Qs are up here, and that was a tough time for the Qs in general. But where we are now and where we have been over the past several months, here I just highlighted the 6 months, and you have to go back. It looks like in August. We did have a spike in August, but for the most part, this is quiet, especially when you look at things, when you pull back a little bit. There's just not a lot of indicators of rising volatility right now, and I think that's a good sign for 2025. Reason number 4 now for a bull market to continue in 2025 is where we're at on sectors, quite honestly, and this is an awesome chart by J.C. Parrots at All-Star Charts on Twitter. He's definitely worth following. He's much more of a momentum trader than I am, but I've learned a ton just reading this guy and the different indicators that he calls out on his charts. So I'll start there. You can't have an honest conversation about market breadth without including sector rotation. Notice how relative to the Qs, that's the key here if you try to look this up on your own. It's relative to the Qs. Tech stocks are hitting new 52-week lows, while consumer discretionary is hitting 52-week highs. And obviously with consumer discretionary, those going up is a very interesting sign because a lot of the bearish sentiment says people can't afford this, people can't afford that, they're paring back. They're in debt, all those things, whereas this particular measure of tech stocks versus consumer discretionary as it compares to the QQQ suggests that consumer discretionary stocks are actually more popular here in January or the last 6 weeks than tech stocks. So bottom line, you have more bullish bets going on consumer discretionary right now than you have going in on the tech sector. And here's another chart that JC shared regarding sector rotation. Money rotating out of consumer staples, and into anything else is what we historically see during a healthy environment for stocks. And this is XLP here versus the SPY, and you see how far consumer staples are going, and really, consumer staples don't get a lot of publicity, I don't think, anymore, certainly not on YouTube and Twitter and where the sexy stocks are always technology. But if we just go back to 22 and 23, you see how that spike or that rotation back into staples, and now you're hitting new all-time lows. Very interesting stuff if you're trying to think about where the bets are being placed. All right, reason number 5 to be bullish in 2025 is kind of a funny, not funny data point. And you probably saw that Nancy Pelosi's trades came out here. When was this? This was this was January 20th, but these are all things that happened in December because they get reported on after they occur. But here you got Pelosi, calls on Google, exercised her right to buy the shares of NVIDIA, exercised her right to buy the shares of Palo Alto, and then you have TEM, which I don't know a lot about, but if you look up that stock, it's gone bananas since she introduced these calls or since the reporting came around on those. Same with VST. Now, she did sell, so 31,000 Apple shares, but she still has 49,000 left. and then 10,000 NVIDIA shares. She still has 60,000 left. Now, obviously, you might see the 10,000 shares sold and be concerned about it, but she does have the 60,000 left. And then, up here, she obviously just exercised her right to purchase off of the call option. So the simple math of 50,000 versus 10,000 would be a bullish sign there. And if you're bullish on NVIDIA, it's hard to believe you wouldn't be bullish on the stock market as a whole. It's probably also some pretty good news for Google when it comes to the monopolistic or monopoly hearings or whatever's going on. And then you'll just have to do your own research on this TEM and VST. I've seen this is more of a AI, physician health insurance AI of some kind. And then VST, I think, is a retail energy company. So you can look at that if you want to follow Pelosi. And if you do follow Pelosi and you're wondering, hey, why is this necessarily bullish just because she buys? Well, this is hilarious, and I can't speak to the scientific accuracy of it, but in 2024, someone did the inverse Kramer ETF or tracker, however they set it up. So the opposite of what Kramer says to buy, or if he says sell, you buy those. And then Pelosi's portfolio. And at the end of the year, Pelosi beats Kramer by a pretty significant amount. And that's why I say funny, not funny, when Pelosi goes bullish, because she, you stack her against one of the bigger figureheads on TV, and she came out winning, at least in 2024. All right, so those are 5 of my reasons to perhaps stay bullish as long as you can through 2025. The bears are coming in hot, and they're trying to convince everybody else that the stock market is going down the tubes. Sometimes it's good, at least to look at the contrarian philosophy there. So that's what I tried to do here today. Before you go, don't forget to check out that special offer for Seeking Alpha Premium in the description. Potentially support my channel at the same time. I hope everybody's doing well. We'll see you on the next video.